We're in a new financial year now, and it brings to a close our first close-ended defined term special situation fund, the Oil and Gas Services Fund. It's been a phenomenal journey, and we've generated 31% as an IRR per annum since inception. But I guess the question really is, how did we find ourselves an organization that's focused on Aussie equities, seemingly all of a sudden investing in global equities?
So how it started was in the Collins Street Value Fund, which is domestic only. There was one company where we did a lot of research, and the company was MMA Offshore, or Mermaid Marine.
Yeah.
And as being the only listed company here, we needed to look overseas to create some benchmarks and analysis and kind of dig deeper into the company and the sector. And then as we did, that's when we really got excited about the opportunities that are wider than just on the ASX listed. Globally, the offshore oil services sector, they had an amazing period in kind of the early 2010 up until kind of 2015-16 period.
And a deep bear market after that.
Then a very big bear market where we saw the bankruptcies, we saw a lot of companies enter Chapter 11. Then we saw the recapitalization of those companies.
Yeah.
And then, obviously we waited to see the green shoots to the turnaround before we decided to invest. So it was a beautiful boom and bust cycle.
I think it was even cheaper overseas than it was locally.
The overseas companies were cheaper, they were larger. And from a historical perspective, they've been around for a lot longer as well. And so naturally it made sense to us to look to take advantage of that opportunity.
And we recognised that we didn't have a mandate to invest in it for our Aussie fund. We were quite disappointed.
And we transitioned naturally from, as I said, from the one listed company to the half a dozen or more international companies, which were mainly in the North American jurisdiction.
I suppose one of the things that stands out as a little bit unusual about the way we ran this fund over the last 5 years is that rather than holding investors' capital all the way through to the end, we gave back capital incrementally over time, so that after the first 2 years, for instance, for every dollar invested, investors had already received $1.20.
Initially, some of the companies, after the first couple of years, that we had a lot of M&A and a lot of takeovers. So the market did get pretty excited. Some of the multiples on the takeovers were quite high, and so naturally, when we exit an investment from an M&A, you really have two choices. You either redeploy that capital in effectively the same stocks that we already bought, because we thought we bought the best of the world's offshore oil services, so we already owned those. But if they got taken over, do we redeploy in those same stocks, or should we give it back to our investors? I do believe you can still be bullish a thematic, but be up a lot. So you don't want to deploy new capital, but you're also willing to take money off the table to reduce the risk. So if after the second year, when we returned $1.20 per every dollar invested in the fund, effectively every investor was more than free carried.
Look, it's been an interesting 5 years, and again, it was our first foray into global markets. Were there any lessons that we can take away from the oil and gas fund that we can apply to either our global mandate fund or to our Australian value fund?
I think the two lessons learned were, number one, I think we are comfortable and believe we have enough resources to invest successfully in the overseas markets.
Yeah.
So perhaps originally when we started Collins Street, we thought we were known as the ASX only value investors, and that we're here, this is our home country, we have an edge. But we've found that we actually do also have an edge internationally. We do the extra legs, we do speak to management, we do speak to competitors and peers. So naturally we do a lot of the same work. But we've had success because a lot of the companies overseas are larger, they are more liquid, they are more accessible, there is more information around about them. And so I think that's the first lesson. The first lesson is that we have proven that we can succeed overseas. The second lesson is industry cycles, so capital intensive industry cycles, whether it's the offshore oil services or whether it's mining. We are pretty good readers of the booms and busts within those cycles. And
Yep.
so I think what we've learnt is the practical reality that in cyclical industries, when they're in downturns after a boom, so when they're in the bust phase and everything's depressed and no one wants to know about the stocks in those sectors, you normally wait till you see the green shoots, and that comes from the supply side. So if one concentrates on the supply side for an industry downturn, that's normally when it is at or near the bottom.
That brings me nicely to the next question, I suppose. We've done obviously pretty well out of the oil and gas offshore services fund. That generated a 31% IRR. We've done similarly well in our gold fund. The question is there another special situation fund on the horizon?
In the short term, there's nothing, nothing that we're planning, or I should say, no industry that we're seeing amazing asymmetry that we think's about to turn. But I do think there will be a third special situations fund, but it's going to happen organically, and we're going to be as opportunistic as we've always been. And so it's kind of stuff that you can't plan.
Yeah. Look, I think with the launch of our global mandate, we now have an avenue to invest in sectors and areas we didn't before. But much like our gold fund, if you want additional exposure, if we want additional exposure, I think a special situation fund does make sense. But to your point, it'll come organically and it will come when it comes. All right. Vas, thanks so much for joining us today. And to everybody who listened in, if you have any questions about this fund, about our global fund, or about our value fund, please be in touch with us. Thanks so much and bye for now.